Hello students, this is your Mr. GST who actually makes GST a good and simple tax for you. In this video, this is mainly for CA final students. The 35 case study based MCQs, the booklet released by ICAI, the 35 case scenarios I am going to quickly solve in this particular video. It is going to be less than somewhere around 2 hours, like 1.5 hours or somewhere around that. And in this, I will be not discussing in detail every case scenario, all that and wasting your time. Quickly I will be covering all the key adjustments, where and all you do mistakes, where and all there are some tricky points, where and all you will get confused, how institute will just try to play with the words, etc., etc., to confuse you and to make you to select the wrong answer, all that. So all that adjustments, etc., everything have been properly discussed, and I have invested almost 24 hours of time to record this video, even though the video is very short. I mean 1.5 or 2 hours, but still I have invested almost 24 hours time to give this content for you. So I hope you will be enjoying this video. So please get into the video. Wishing you all the very best. Thank you. So the key adjustments in first case study, if you see the first question here, what they have asked is nothing but the total GST liability net of ITC paid through GST portal. There are two things. There are the important thing here is, sir, what is the GST paid in GST through GST portal? In this question, there is import of goods. The important catch is, sir, you are importing goods, and when you import the goods, you will pay GST when you are importing the basic customs duty and IGST. So customs duty you will pay, no, right? You will not pay that through GST portal. So that you should be careful here. You are importing goods, on that GST is not paid, IGST you are paying, that IGST is not paid through GST portal. So that amount you should not consider. That is very important thing here in question number 1. Second one, with respect to second question, they have asked you what is gross GST liability without any adjustment of ITC. Here the important catch what they are trying to test is the gross GST liability. When they are saying gross GST liability without using ITC, sir, your gross GST liability will come on your outward supplies covered under forward charge, on that you are liable to pay GST, and inward supplies covered under reverse charge, that is also coming under your gross liability. So when they ask gross GST liability, and one more important thing is, sir, they're asking only gross IGST liability, not CGST as GST. That is not a big thing. There you should be careful while reading the question. But very important point is gross liability. When they ask you gross liability without any adjustment of ITC, what they are trying to test? They are trying to test, sir, you have a liability on your sales forward charge, and also you have a liability on your purchases which are covered under reverse charge. Both things you should consider and you should answer the question. That is another catch here in second question. Next, the third question. The third question is, sir, you are taking hotel booking services and they are asking you on that invoice like 1 lakh rupees, all this stuff, sir, whether how much amount you can take ITC, all this stuff. In this, they have spoken something like reimbursement from employees, etc., etc., like that. Employees are staying in hotel and hotel expenses are paid, and that is reimbursed to the employees, and the invoice is given in the name of the company, all that. But please understand, this company is located actually in different state. The hotel is in different state. You know, place of supply provision says immovable property. Sir, location of the immovable property itself will be the place of supply. That means, imagine here in Gujarat the company is there, in Maharashtra the hotel is there. Hotel will charge CGST plus Maharashtra state GST. For that, the Gujarat company cannot take ITC. So ITC itself will not be available in this case. This is one thing which they are testing your place of supply knowledge also. So you have to be careful in such type of cases. Next one, the remaining one, small one, event organization. So place of supply, what will be the place of supply? If the recipient is registered, no matter whether event is happening in India or abroad, sir, the place of supply will be the location of the recipient where he is registered. So it will be Gujarat only. Okay. So that way, these are the small things here in this particular first case study. So now the case scenario 2. In this case scenario 2, see, first of all, there is Doodle Incorporation located outside India, and there is a subsidiary Doodle India which is incorporated in India and registered under GST also. Now in this question, the key takeaways are nothing but, see, first question they have asked you, what is the output tax liability? See, there are two companies here, one is outside India, one is inside India. They have given what and all activities done by these two entities. So both of them has some liabilities, all that stuff. So here they are asking output tax liability without any adjustment of ITC, if any, of Doodle India for the month of January. Here very important point is the output tax liability. If you see in case study 1, when we have discussed, sir, the case study 1, in that they have asked gross liability. When they're asking gross liability on outward supplies, inward supplies, both the cases, what is your liability, you should calculate. That means RCM also should be added. But here they're asking output tax liability. That means you should only see on sales. That is very important point here, which you may miss out. So please be careful. This is one thing. Next one. So the next one is, because both are registered in different countries. See, another important point we should remember is both are registered in different countries. That means they are not mere establishment of same entity. So whatever is happening between them is properly treated as export. That means if this fellow is doing something to this company outside India, that will qualify as an export. And in the question, there are some exports given, and they will say the value of exports. The value of exports will be cost plus 10%, cost plus 20%, like that they have given. First of all, they are located in different countries, registered in different countries. So whatever is done from this Indian company to that foreign company, they are not mere establishments of same entity. So they are not distinct persons just like that. They are different establishments altogether. We will call it as export of service. We will call it as export of service as per the definition of export of service. So here the important thing is they have given take value as cost plus 10%, cost plus 20%. They have given cost also. In the question, you should not definitely directly jump into the answer like, okay, cost is this much plus 10% is the value. The very important tricky point what they have given here is, sir, they said again, Doodle India, whatever it has done through furnishing the LUT without payment of IGST. So all the exports done by Doodle India are without payment of tax. That means here for these exports made by Doodle India, GST liability will not come into picture. So whatever the information they give regarding the cost plus 10%, cost plus 20% will not be of any use, will not at all be useful in the question, just to confuse you. That you should understand. Next, the third tricky point here is, sir, here whatever the transactions are happening, Doodle Incorporation and Doodle India are working on principal to principal basis. There is no principal and agent relationship. They are working on principal to principal basis. So this is being tested on latest actually amendment or a clarification. So the place of supply shall be determined as per 13 subsection 2, not as per 13 subsection 8. This you should be careful. They are working on principal to principal basis, not as principal and agent. So place of supply will be as per 13 subsection 2, not 13 subsection 8. There is another thing. And one more important thing is import of OIDR services. If you see OIDR services, see, Doodle Incorporation is providing OIDR services to non-taxable online recipients also in the question, and also to this Doodle India. See, if you remember, OIDR services provided to non-taxable online recipient, it comes under forward charge mechanism. So Doodle Incorporation is liable to pay GST on that. But if it is provided to a person registered in India, then RCM will come into picture. So on that OIDR services, this Doodle India is liable to pay GST under RCM, and this can take ITC of that. So in the question, they have asked the liability of Doodle Incorporation. Doodle Incorporation liability will come only for supply of OIDR services made to non-taxable online recipients, which comes under forward charge. For that, Doodle Incorporation outside India has to pay GST. Okay, that you should not forget. Please be careful here. OIDR services are provided to non-taxable online recipient also, as well as registered fellow also. To non-taxable online recipient, it is taxable under forward charge. So Doodle Incorporation outside India, there is liable to pay GST. For registered recipient, RCM will come into picture. So the person in India will be liable to pay GST. So please be careful with that. There is another key adjustment here in this question. Next. So the questions, that is what we have discussed. So this one also we have discussed, this OIDR services RCM and Doodle Incorporation. What is the GST payable by that? Doodle Incorporation is outside India, no? I told you, no. So OIDR services provided to NTOR, that alone will be taxed. Next, ITC for Doodle India. When ITC for Doodle India you are seeing, sir, you should also take RCM supplies are there. RCM supplies received, on that ITC you can take, that you should consider. Okay, that is what with respect to case study number 2, key adjustments. So in case study number 3, see, this is something like Abhivyakti Private Limited, which is engaged in supply of food products, all that stuff, from West Bengal. What are the key points what I have observed in this case study? Now, please understand. Obviously, subsidy linked to the price. If it is given by the government, you should ignore that. You should not add it to the value of supply. They have tested on that. And next, the interesting part is this. Sir, the company is giving staff quarters, the residential quarters for its employees, and collecting rent from the employees. Sir, when they are collecting rent from the employees, see, understand, we are allowing somebody to use the residential property for residential purpose. Renting of the residential building for use as residence, it is exempt under GST. Even though company is renting the residential properties for the employees, it is for residential purpose only they are renting, and they are collecting rent from their own employees, is exempt under GST. Remember that carefully. Next, Supply of electricity is exempt from GST. That is another thing you should understand. Next, interest. See, interest portion, always remember, interest in GST will come in two cases. One is, sir, because of late payment, you are paying interest. That will be added to the value of supply and it will be taxable. And the other case is, you are going for loans, advances or deposits. So, extending the loans, advances or deposit for which you are earning interest income. That is exempt under GST. Okay, please be careful with this. Next, this is something which I actually liked. Goods transport operator is providing services of transporting the goods. Goods transport operator is not GTA. Please understand. GTA is different. Goods transport operator is different. So, you know, transportation of goods by road is exempt except GTA and courier agency. Only GTA and courier agency is taxable. Remaining any fellow is exempt. So, be careful with the word goods transport operator. If you see, that is not a GTA, so exempt under GST. And they are also given individual lorry truck driver who is not a GTA, that is also exempt under GST. And another interesting thing is there is an MCQ they have tested here. Minor breach, on a concept of penalty for minor breach. The penalty for minor breach you will not be imposing. But minor breach means where the amount involved is less than 5,000. If it is equal to 5,000, it is not a minor breach and you can happily levy penalty of 5,000 rupees. Okay, so that is what the concept. Okay, so with this we have covered key adjustments or points with respect to case study number 3. So if you see in case study number 4 here, this is regarding a person by name Ashok who is proprietor of Office Link Enterprises from Kolkata, that is West Bengal. What are the key points, key adjustments in this? Now see, not that great complicated MCQ actually. So there are very like only 4 key points. One is this fellow is taking here voluntary registration, and hence because he is taking voluntary registration, whatever the inputs lying in stock, immediately preceding date of grant of registration certificate. Okay, on that he can take ITC, only the inputs, ITC on inputs. And legal fees here, please understand, whenever you see legal fees, automatically your mind thinks of RCM. But legal services provided by advocates, all these people, sir, legal services to a business entity in taxable territory whose aggregate turnover is not exceeding the threshold limit. That means in our discussion in class, we would have called a small bet. That means for them, if you are providing for business entities whose aggregate turnover is not exceeding the threshold limit, who are not even liable for registration, for such business entities, if you provide, that is exempt under GST, so no RCM, nothing. So whenever you see legal fees, it is not straight away RCM. Please be careful. Next, see, this fellow has rented a house to a person who is working as an employee in a bank. The rent is paid by the bank. That means I am giving my house on rent to you, but the rent is paid by your company, by your boss. That means here, even though I am renting the residential property, this is not to the person for residential purpose. The company is paying the rent, so it will be taken as official purpose, and hence it will be taxable under GST. RCM or FCM, you should see if the recipient is registered, RCM. If the recipient is unregistered, FCM. But understand, if the rent of any employee is paid by the employer, the company, to the owner, then it is not personal purpose, it is official purpose, taxable. Next, one more time we are testing this hotel rent, where you are going to a different state, staying there, taking a room in the hotel and staying there, paying the room charges, and you pay CGST, SGST in that state. So here, because of place of supply, all that, here in this state you are in a different state, so you cannot take ITC. Technically ITC is not allowed. That is what another adjustment. So this is what with respect to case study number 4. So the next one, case study scenario 5. Here there is a company called XYZ Limited which is registered in Rajasthan. It is doing two businesses. One is GTA business and also some other business of like what installing and fabricating the vehicles. Okay, so if you give the chassis, they will just make it like a proper vehicle and will give it to you. So they are doing two businesses. Now, what are the key points in this particular case study? Now, see, first of all, GTA, if they give any time in the question, GTA not exercised the option to pay tax. That means GTA is not opting for FCM. That means what is the general rule? RCM. Okay, whenever you see the word GTA not exercised the option to pay tax, means yes, this is an RCM transaction. GTA is not paying tax under FCM. That is what the point. Okay, now, sir, when any person is doing a business, one is GTA and the next is others. For GTA business, obviously, if it is under RCM, whatever the purchases made for that GTA business, you cannot take ITC. But for other businesses which are coming under FCM, for that particular business, whatever you purchase, you can take ITC. This you keep in mind. Okay, right. That is another point in this particular case study. And this is very, very important one. Always remember, that is, suppose you are sending some goods for repair to a place outside India. You are sending the goods to a place outside India for repair, and the goods will get repaired and will come back to India. Now you are taking repair services from a person located outside India, and because of section 13 subsection 3 of IGST Act, place of supply also will become outside India. Sir, when location of supplier is outside India, place of supply is also outside India, then obviously what will happen? There is no GST and you cannot take ITC also. So GST implication itself will not be there. So here please be careful with this. That is what the key points from this particular case study number 5. So the next case study, if you see case scenario 6, a small case scenario, not that complications, but I have identified two key points here in this. One is, see, when you're doing business, you have two branches. One is in DTA and the other is in special economic zone. Sir, in DTA, it is doing 4.2 crore turnover, and the special economic zone unit, it is doing 2 crore turnover in the preceding financial year. Imagine. So put together, what is aggregate turnover? Aggregate turnover is 6.2 crores. It exceeds 5 crores. That means e-invoice provisions are applicable. E-invoice provisions are applicable only for DTA unit, but not for the supplies made from SEZ unit. This you should be careful. Okay, you know, e-invoice provisions are relaxed for the unit located in SEZ. But for SEZ developer, e-invoice provisions are applicable. Remember that also. Next, the another point what I have identified is nothing but, sir, you are not displaying your GST certificate at the prominent place, or your GST IN is not displayed in the, not mentioned in the name board. So is it a violation? Yes, it is a violation, but the penalty for that is not mentioned anywhere in the law. So the general penalty under section 125, which may extend up to 25,000, 25,000 CGST, SGST, that is 50,000. This is not flat, it may extend up to. In the options, they have given only 5,000, 10,000, 25,000 and nil. You can select 25,000 as the answer. Okay, so these are the two tricky adjustments which I have found out in this case scenario number 6. The next one is case scenario number 7. Actually, there are no that tricky adjustments or etc etc. But this case scenario 7 is purely regarding rule 43, the common use of capital goods for both taxable as well as exempted purpose. You can try it on your own. Easy one, not that difficult. Rule 43, if you have studied, you can easily crack this. No tricky adjustments, nothing in case scenario number 7. So the next one, if you see the case scenario number 8, not much nothing that greatly technical, all the stuff. So no need to worry of that. Regarding case scenario 8, no tricky adjustments, nothing. Case scenario number 9. If you come to case scenario number 9, please understand here, this is not that great tricky, but I have one point to discuss with you. And this point is also regarding, you are making some purchases and sales which are intrastate, interstate, and it also includes taxable and exempt. So some common purchases which are used for both taxable, exempt, kind of rule 42, 43, one MCQ is there. Apart from that, remaining MCQs are based on blocked credit, etc etc. Simple MCQ only. Simple case scenario only. One interesting point is, they have asked you to calculate value of exempt supplies, for the purpose of reversal of ITC under section 17 subsection 3. When you are calculating value of exempt supplies, sir, here securities, when you supply, sale of securities are also treated as exempt supplies, because exempt supply includes non-taxable supply. So sale of securities also taken as exempt supply, and the value will be 1% of the sale price. 1% of the sale price. So when you are calculating exempt supplies for the purpose of reversal of ITC under 17 subsection 3, then if securities are given whatever the sale value, from that 1% you take and treat it as value and add it to the exempt supplies. I repeat, suppose if you are selling securities for 1 crore, 1% will be the value. So 1 lakh you should add here for exempt supplies. That is what we have to take care. So that is with respect to case scenario number 9. Now let us move on to case scenario number 10. So if you see the next one, case scenario number 10, see here the small 2 points actually here what I have observed. See, nothing but there is a person by name Mr. Venkat, a practicing chartered accountant from Telangana, providing some services. Now here, see in the MCQ, they gave some free services to unrelated persons, free services provided to brother also. The free services provided to unrelated persons, they are not at all a supply, because they don't satisfy the definition of supply, because no consideration, no supply. But in the question, they'll give you market value, open market value, just to confuse you. So it is not at all a supply, so there is no GST implication at all. Just because open market value is given, you should not take open market value as the value of supply. Okay, that is number 1. Number 2, sir, they have provided services, easy one only, not that tricky one. Services provided to brother, brother is a software employee. And they said open market value, the cost is 75,000, but because it is his brother, he is giving 90% discount. That means he is charging only 7,500. Now, what is the value of supply? See, first of all, brother is a software employee and who is not dependent on this fellow. That means brothers are related only when they are wholly or mainly dependent. He is not mainly or wholly dependent. So brother is not a related person. Value of supply will be nothing but whatever the transaction value happening between them, that will be taken as value of supply, because brother is not related. In this case, it is not brother. What if it is son? Sir, son is nothing but the child. Children are always related no matter whether they are dependent or not. So if it is child, automatically we will take open market value as value of supply. In that case, open market value is 75,000. That will be the value of supply. Okay, that is what the point. So with this, we are done with case scenario number 10. So the next one, case scenario number 11. Again, what are the key points here? I think some 3 key points we can understand from this MCQ. Easy MCQ, but 3 interesting points. First of all, see, they have mentioned something like penalty lump sum for delayed payment of 60 days here in the question. See, when you look at the penalty, straight away you should not jump into offences and penalties chapter. Penalty is nothing but for delay in payment of consideration. Supplier is charging. That means it is just like interest for late payment. So interest, late fee, or penalty by whatever name called, if you remember. And they said lump sum 10,000 rupees. What does it mean? The customer has paid only 10,000, but on the GST also has to be paid. But he has given only 10,000 fully. So you should treat that as inclusive of GST and do the reverse calculation, calculate the GST liability. Okay, this is first one. Next, the second one. See, the interesting point what I have observed in this MCQ is transportation charges. See, I am the person who is doing business here. And see, my old customer is coming and asking, Vishnu sir, I have purchased goods from some other person. I have that goods. Can you transport these goods to my location? I said, my old customer, okay, I will do that. So what is happening? I am transporting the goods of my old customer, which he purchased from some different fellow. That means I am providing transportation services. Am I a GTA first of all? I am not at all a GTA. In the question, they have clearly mentioned not issued any consignment note. That means I am not a GTA, so those services are exempt. Suppose if I am also doing GTA services, sir, I am issuing consignment note, then it is taxable. RCM, FCM, we have to see. But I am only selling the goods and I am only incurring transportation charges, incidental expenses, recovering from my customer, then it will be added to the value of supply. You are aware of it. The interesting part here in this question is somebody else sold the goods and my old customer is coming and asking, can you transport this? You have a lorry, no? I am transporting, but I am not issuing consignment note. I am not a GTA. Transportation of goods by road by anybody other than GTA and courier agency is exempt under GST. That is the point here. Okay, that you should be careful. Next, there is one more point actually. Free catering services one fellow is providing to his elder brother for the business of elder brother only. Okay, free catering services. Now in the question they told, sir, there is no open market value available. There is no value of like kind and quality of the goods available in the market for that services. But we know the cost. They give some cost like 55,000. The moment you see this, what will happen? You will go to valuation rules, cost plus 10%, all that. The services are provided to his elder brother for his business means elder brother is doing business. Elder brother is not dependent on you. That means elder brother is not a family. He is not a related person as per the related family definition. So straight away, no consideration, not a supply. The cost 55,000 they gave, no, that is just a trap for you so that you will make plus 10% and decide the value and charge GST on that. So please be careful. So these are the key takeaways from this case scenario. So friends, the next case scenario number 12, again, not that great MCQ, simple one only. But what are the key takeaways here are nothing but, see, they have given you various items which are exempt, all the stuff. And also they said this fellow is selling petrol. And there is one question asking what is the value of exempt supplies. Please understand, when you are going for value of exempt supplies, we always focus on, okay, what and all are exempt. But exempt supply definition says exempt supply includes non-taxable supplies also. So whatever the petrol turnover is also there, that also should be added while calculating the value of exempt supplies. So simple, when they're asking value of exempt supplies, not only consider only exempt, exempt supply means which are wholly exempt, which are nil rated, which are even non-taxable supplies, we should add it to the exempt supply definition only. So petrol, non-taxable supplies also should be taken for value of exempt supplies while calculating. Second one, see, transportation of household goods by GTA. When you see this transportation of goods, household goods by GTA, automatically to your mind it comes exempt because for individuals it is providing. But here, this transportation of household goods of an employee who is getting transfer and shifting to a different place, and the transportation charges are incurred by the company. That means GTA is providing services to the company, not to the employee, not to the individuals. You cannot take exemption there. It is taxable. Okay, you should see RCM or FCM accordingly. But in this question, they are stressing on this point only. Just because it is transportation of household goods, you cannot say, sir, it is exempt under GST. Be careful. Next, there is one more point regarding e-way bill generation. the validity of that. E-way bill is generated on Monday 12:04 a.m. and they said 220 kilometers is the distance. See, 220 kilometers, every 200 kilometers are part thereof 1 day validity will be there. So 220 kilometers means 2 days validity. When this e-way bill will expire, anytime when you are calculating the validity of e-way bill, please understand, ignore the day on which e-way bill is generated. Ignore that day. So Monday it is generated, ignore Monday. 2 days validity, Tuesday and Wednesday. Wednesday midnight 12 o'clock it will expire. That means midnight 12 o'clock between Wednesday, Thursday is there. No, that midnight 12 o'clock it will expire. That is what you have to see. So these are the key takeaways from this particular case study. So if you see the next case scenario number 13, very easy case scenario. This is based on purely time of supply, and in value of supply, the discount concept is there. No, based on that, nothing complications, no tricky adjustments, etc., etc. Only thing, remember, when advance is received for supply of goods, it is not immediately taxable. Time of supply will not come into picture. But for services, when the advances are received, they are immediately taxable. That difference alone you just remember. Apart from that, case scenario number 13 doesn't have any tricky adjustments. Now, if you see case scenario number 14, the case scenario number 14 is also not that difficult one, but again, some 3 tricky points I have understood. The tricky points in the sense, when you're reading the MCQ, please be very careful, because sometimes they will ask you what is the correct statement out of the following options. Sometimes they will ask you incorrect. Mostly in the exam tension, you will read incorrect also as correct statement. So please be careful when you're reading the question here. That is one thing I wanted to suggest. Next, another point is, see, when you are calculating aggregate turnover, you are calculating aggregate turnover for the purpose of composition scheme or for the purpose of registration. So these are mainly two areas where you will be computing aggregate turnover. When you are calculating aggregate turnover for the purpose of composition scheme, please ignore the interest income what you are earning by extending loans, advances or deposits. But if you are calculating the aggregate turnover for the purpose of registration, whether you are liable for registration or not, then you add it to the aggregate turnover. So interest income, ignore it for in composition scheme for section 10 purpose. Anything you are doing under section 10, ignore this interest income. But that should not happen in registration case. In registration case, for aggregate turnover, you should add the interest income. That is another important point. Next, the third one is, obviously you will be knowing place of supply one. One fellow is selling to another fellow, that fellow is selling to another fellow, but shipping is done by this fellow. In the question, what has happened now? Sir, Akash is making a sale to Abhijit. There is a sale between Akash and Abhijit. But Abhijit is asking, so Akash is from UP, Abhijit is from Gujarat. But Abhijit is asking to deliver these goods to his customer in, again, UP. So this is build to ship to model between Akash and Abhijit. This is one sale. For this, what you have to do, you should determine place of supply accordingly. So build to ship to model, whoever is giving the instructions, even though delivery is to ABC Private Limited of Uttar Pradesh, who gave the instruction, person in Gujarat. So that will be the place of supply. This is one sale. So you should treat it separately, calculate place of supply accordingly. And Abhijit is selling the goods to ABC Private Limited in Uttar Pradesh. Here, billing by Abhijit is also done to ABC Private Limited. Shipping is also done to ABC Private Limited. Shipping is done by some other person, that's a different story. But Abhijit is only raising invoice. Abhijit is only sending the goods according to ABC Private Limited. So here, movement of goods is involved. Where the movement is, like when movement of goods is involved, what is the place of supply? Where the termination of the goods is happening. So Abhijit is from Gujarat. Goods movement is terminating in Uttar Pradesh. So the place of supply will be Uttar Pradesh. So here also IGST will come into picture. Here also IGST will come into picture. When these three types of characters, three different characters are given and two different supplies are given, please be careful. Take every type of supply separately and calculate the place of supply accordingly. So that is what the key takeaways from this case scenario. So the next one is case scenario number 15. Case scenario number 15. Purely regarding e-way bill and certain points to revise, that's all. Not that great difficult things, but just to revise good points. Number one, see, if you are a warehouse operator, you need not take mandatory registration. You can enjoy the threshold limit for registration, but you should apply for unique enrollment number till you get your registration done. That means once your aggregate turnover exceeds the threshold limit, take registration, then this will lapse. But till then, because you are a warehouse keeper, you are storing the goods of multiple people, you should apply for unique enrollment number. That is important. Next, transporter who is registered in multiple states. Only when he is registered in multiple states, he can apply for something called unique common enrollment number, which is used for like updating part B in the e-way bill, all that stuff. So in multiple states, if you are a transporter registered, then you can go for unique common enrollment number. Okay. Next, sir, when there is interstate movement of goods, even though the value of consignment value is not exceeding 50,000, you should generate e-way bill. That means consignment value doesn't matter if interstate movement is happening between principal and job worker, not everybody. Some unrelated people, sale is happening, all the stuff, they can enjoy this relaxation. But if it is principal and job worker, interstate transfer, then definitely e-way bill should be generated irrespective of the value of consignment. Next, the last one is nothing but consolidated e-way bill can be generated for multiple e-way bills, even though multiple e-way bills has multiple validities, still consolidated e-way bill can be generated. These are the key takeaways from this particular case study. If you see next case scenario number 16, I don't see any tricky adjustments apart from, see, if you remember, when you are purchasing the vehicles less than or equal to 13 including driver, you remember that including driver, sir, they are covered under 17 subsection 5 blocked credits, but there are exceptions. Here there is an exception. This fellow is into business of transporting the passengers, all that stuff, passenger transportation, so he can take ITC no matter it is 8%, 9%, 11%, 13%, including driver also, he can happily take ITC. The only thing is you just recollect less than or equal to 13 including driver is a blocked credit, but there are exceptions. Okay, that was the only key point. Apart from that, nothing greatly involved here. And when you are calculating GST liability, when they ask you one more important thing, remember, when they ask you what is the GST payable in cash, sir, when they ask you GST payable in cash, sometimes you will forget rule 86B. So please be careful whether rule 86B will be applicable there or not. You know, monthly the value of taxable supplies are more than 50 lakhs. Obviously, you have to follow rule 86B, at least 1% you should pay in cash. Some questions they will say ignore rule 86B and calculate. Some questions they will not say anything. Then you should see value of taxable supplies in that month. If it is exceeding 50 lakhs taxable supplies, then you should pay 1% at least in cash. That you please try to keep in mind. So apart from that, nothing else that greatly relevant here. Okay, small points, no need to worry. So with this, we are done with case study number 16. Next one, if you see case scenario number 17, again, not that complicated, all that. Some points are there, let us discuss them. So here regarding, see, one point they have tested is regarding how many months you have to maintain your books of accounts any financial year. You know, 72 months from the due date of filing annual return. That is one point tested. And next, one important thing here what I have identified is, see, when they are asking you the question in MCQs, please be careful with the wordings aggregate turnover and taxable turnover. In one MCQ they asked aggregate turnover, in another MCQ they have asked what is taxable turnover. So aggregate turnover includes everything, whatever the supplies you have made, you know the definition, all that stuff. Taxable turnover only the taxable supplies what has been done, that you should be careful. And in this one, the catchy point here is, sir, I am acting as an examiner for the exams conducted by ICAI or ICSI and I am getting revenue. Now, please understand, this is nothing but the supply I am making and this will be added in aggregate turnover. But because I am providing these services to an educational institutions getting any supply with respect to in connection with conducting the exams is exempt under GST. Like for example, you see setting up the question papers, printing the hall tickets or acting as an examiner, all these things. So this is exempt under GST. So that will not come in taxable turnover. So I repeat, acting as an examiner for exams conducted by educational institutions is supply, but it is exempt. That you should be careful. Next, permanent transfer or disposal without consideration to unregistered persons. You know, it is a schedule 1 transaction. Even though it is without consideration, it is supply. And how do you determine the value of supply? As per rules 27, open market value. Okay. So next, interest. This is another important point in this particular case study. Interest calculation. See, when interest is calculated under section 50 for delayed payment of tax, please understand, if there is delay in filing the return, because of the delay in payment of tax is happening, one amendment is also there here. You should pay interest on gross liability minus ITC balance you have minus cash balance lying in e-cash ledger. After that, whatever the remaining amount is there, on that only interest has to be paid. This is very important. Amendment also is there. So I repeat, interest for delay in filing the return, because of that there is delay in payment of tax. Then on what you should pay interest under section 50 is gross liability you take. From that, I repeat, delay in payment of tax because delay in filing return, gross liability minus ITC balance lying in credit ledger and minus cash balance lying in cash ledger. After that, whatever the balance amount is there, on that only you should calculate interest. In any other case, interest will come on gross liability. That you please be careful. These are the key takeaways from this particular case scenario. Now coming to case scenario number 18, if you see, in this what are the key takeaways are nothing but see, first of all, they have asked a question, GST payable after set off of TDS credit. When they use this word after set off of TDS credit, please be careful. Yes, you should calculate your gross GST liability minus ITC and minus TDS TCS, whatever the amount is reflected in your cash ledger. Of course, TDS TCS, whatever has been deducted or collected from you, that will come and reflect in your cash ledger. On that, whatever after deducting that, whatever balance actually payable by you in cash, that you should be selecting as the correct answer. This is first point. Next one, see one more thing, you're coming out of composition scheme and started to pay tax under normal scheme now. 18 subsection 1 clause C will give you an advantage, that is you can take ITC on inputs which are lying in stock, work in progress, finished goods, all the stuff immediately preceding day of completing your composition scheme, like you are coming out of composition scheme. And also on the capital goods you can take ITC. If you remember, GST paid when you are buying the capital goods minus 5% per quarter, how many quarters you have used fully or partly, that much you have to pay, that you know obviously. Next, point 3 is regarding refund under rule 89 sub rule 4. You know, refund under 89 rule 89 sub rule 4, you can take ITC, accumulated ITC balance, sir, ITC amount into zero rated turnover divided by adjusted turnover. So not tricky point, but please pause the video, try this on your own and then continue this. So not tricky one, but just because regarding refund, a good one to practice on your own. Okay, just do that, simple one, but just because it is refund, I'm asking you to do it on your own. Next, and as I said earlier in the first MCQ, the first point when we are discussing, they have asked you tax liability to be paid in cash, correct? In that also one more interesting point is they asked it for a period of April to Feb. Now, in the April to Feb period, sir, for some portion, April to June, you are in composition scheme. Later on, you came out of composition scheme and started paying in tax in normal scheme. In that cases, see, when you are in composition scheme, whatever the liability that you cannot use ITC, you should fully pay in cash. So when they ask you to pay, calculate tax liability in cash, this period during composition scheme, whatever the liability, you should take fully. And in normal scheme, you can use ITC, balance all the stuff, and then calculate the liability, cash liability, all that. Okay, so please be careful in the question. For some period when you are in composition scheme and some period normal scheme, please be careful when you are calculating the liability in cash. So these are the key takeaways from this particular case scenario. Right. The next one is case scenario number 19. See here in this, by showing the answer, actually I'll explain this actually based on value of supply. If you have time, try to do it on your own. One good adjustments actually with respect to discount and interest. I'll explain this to you actually. See what they're doing now. They're selling machines to the customer for 40 lakhs, and any machine sold, definitely they will charge 10,000 rupees handling expenses and 1 lakh rupees installation charge. So definitely that 40 lakhs plus 10,000 plus 1 lakh will be the value of supply for sure. Okay, so total 41 lakh 10,000 customer has to pay, and for every sale made they will also get a 2 lakh subsidy from its holding company, not a government. So price directly linked to the subsidy directly linked to the price. So the total value will become 43 lakh 10,000. But here one more twist in the story is, if customer is promising, sir, I will make payment to you within 15 days, like that, if customer promises enough, they'll give them discount of 2%. 2% of this price of the machine, that is 80,000. So 80,000 they will give discount. Now this will become the value of supply, on that GST will come into picture. Hope you are clear till now. So if customer promises, they'll give discount 2% on the price of the machinery, 40 lakhs. Okay, so this will be the value of supply, and on that GST will be charged. But here the twist in the story is, if customer doesn't pay that within 15 days, then whatever the discount we have given, this 80,000, we will recover this money from the customer, and on this extra GST we are not charging. If you look at the question, in the question they have clearly mentioned, sir, cash discount 2% is given. If customer agrees to pay, agrees, that's all, no need to pay, agrees to pay 15 days, immediately we'll give discount at the time of sale itself. Suppose if he fails, then we will recover the discount given at the time of receiving the payment from the customer. No separate amount of GST is recovered. What does it mean? Sir, 80,000 we are recovering, no, the discount amount. That what we should do now? We should do reverse calculation. We should assume this is including GST, and we should do reverse calculation and pay GST on this 80,000. Hope it is clear for you. That means let us assume 12% is a GST rate. This way you should calculate and take the value separately and GST separately. You are aware of it. And next important thing is with respect to interest. See, if what they are doing, they are charging a simple interest of 1% per month or part of the month. 1% per month or part of the month. So even for part of the month, this is very important for you. Even for part of the month, they will charge 1% interest. Okay. And again, one more important thing, they said no separate GST is charged. That means whatever interest is received, you should calculate assuming it is including GST and proceed. Okay. And how much interest? 1% they will charge interest. 1% interest they will charge on what? On the total amount due from the customer towards the machinery supplied. Okay, from the date of making supply till the date of payment. So please understand here, if you are not paying within 15 days, they will recover the discount 80,000, and also they will charge simple interest 1%. Now here the interesting thing is how much is the amount due from the customer as per our calculation. As per our calculation, amount due from the customer is 41 lakh 10,000 when he is purchasing the machinery. On that 41 lakh 10,000, 1% will come as interest. So that way you should calculate interest also. Okay. So if you see, so 2 months delay, actually what has happened here, now 2 months delay has happened. So 2% interest will come. So 41 lakh 10,000, on that interest is 82,200 and cash discount 80,000. So total 1,62,200 you are recovering from the customer, and both the cases it is extra GST you are not recovering. So you are assuming both are nothing but including GST and doing the reverse calculation and getting the GST component here. Hope you are clear with this. So one good question with good adjustments with respect to discount given to the customer and interest portion. Okay. So there is one more question actually. Sir, here the company is selling the machine and providing these handling charges, loading charges and installation, all that stuff. All these things, should we call it as composite supply or mixed supply? They are naturally bundled, so obviously we call it as composite supply. So these are the key points from this particular case scenario. So the next one, case scenario number 20, this is mainly on e-commerce transactions here. What are the key takeaways for us, sir? See, when you're reading any question, not only this case scenario, whenever you're reading any question, please be careful. In the question, they will be using one dangerous line. All amounts given above are exclusive of taxes. So this point, whenever it is there, please be careful with that. So whatever the calculations you're doing, into GST rate only you have to charge. You should not assume anything inclusive of GST unless they specify. Okay. Now, sir, another point is new TCS rate, you are aware, 0.5%. Earlier it was 1% TCS, now it is only 0.5%. That is 0.25 plus 0.25 CGST and SGST. Next, the third important takeaway here is cancellation charges from customers. See, when any cancellation charges are charged by anybody from the customers, please understand we are tolerating this. So tolerating an act is also supply of service. If it is a common industry practice, that means we are not punishing them. We are allowing them, yes, to cancel the orders. We are giving an option, but we want some cancellation fees. So that is also supply of service, and hence taxable GST is applicable. Okay. Now, if you look at the entire scenario here, e-commerce operator is providing various things. Sir, e-commerce operator is allowing sellers to sell the goods through that e-commerce operator, and TCS comes into picture. But e-commerce operator are selling on their own account from their own website. TCS will not come into picture. That you are aware. And one more thing, the e-commerce operator will charge handling fees, platform fees, etc., from the sellers. That means e-commerce operator is providing some service to the sellers. On that, GST is applicable, and e-commerce operator is liable to pay GST on that because they are providing service here. Not only that, e-commerce operators are also providing the option to cancel for the customers, but they are charging from the customers cancellation charges in this particular question. Cancellation charges they are charging from the customers. As I told you earlier itself in the previous discussion, so it is taxable for the e-commerce operator and they have to pay GST on that. We have already discussed this above. So these are the various possibilities they have tested in this particular case scenario. So the next one is case scenario number 21. Very easy one, but two small points actually I wanted to add on here. One is, see, whenever you collect anything in the name of tax, even though you are not supposed to collect, GST is not applicable, but you are charging, or it is 12%, you are charging 18%. In such cases, whatever has been collected, that you have a responsibility to pay it to the government. So you have to pay it to the government. That means you should add it to your liability. When you are asking what is your liability, you should also add the amount what you have collected which is not required to be collected. That is one thing which you should remember. Next one, whatever tax wrongly collected and not paid to the government, if you have not paid it to the government, so the government can issue a show cause notice for you. And if you remember, this is section 76 case. Sir, as per section 76, when any amount is collected where not required to be collected, but you have collected in the name of tax and not paid to the government, further show cause notice can be issued without any time limit. There is no time limit for issuing any show cause notice. So these are the interesting points in this case scenario 21. Next, going to case scenario number 22. Sir, what are the interesting things in case scenario number 22 if you ask me? See, first of all, this is regarding transfer of business as a going concern, all the stuff. See, when you are transferring the business, so when the business is transferred and after the transfer of business, the liability has been determined. Let us assume the liability may be determined before the transfer also, after the transfer also. In that case, who is liable to pay the GST, whether the transferor or the transferee? Please understand, when there is transfer of business, liability related to the previous period before the transfer, whether the liability is determined before the transfer itself or even after the transfer, but liability belongs to the previous period. Such liability shall be borne by transferor and transferee jointly and severally under section 85. Okay, that is one interesting point which we should remember. Okay, one revision, quick revision for you. And next, of course, you will be knowing transfer of business as a going concern, either wholly or partly. If you are transferring the business as a going concern, then it is exempt under GST, no GST implication, right? These are the two interesting things from this case scenario. Next, case scenario number 23. Case scenario number 23 also nothing great involved here, 2 points. It's simple. One, you are a publisher, printer. So for a printer, what we are doing, we are giving the content and asking to print the books, and he is giving to us. Is it supply of goods or services? Sir, when you go with books, pamphlets, brochures, annual reports, leaflets kind of thing, where you give the content, that fellow will print it and give it to us in physical form. Here we are mainly going to him for printing services. So the predominant element is service. So it is treated as supply of service. But in the same case, if it is you are going for envelope covers, letter cards, or printed boxes, tissues, napkins, wallpapers, etc. On that, what see, you are going to buy their envelopes, you are going to buy their letter cards or letterheads or printed boxes, tissues, all these napkins. Incidentally, what they are doing, they are printing your logo, company address, etc. etc. Here, the predominant element is supply of goods, hence it is treated as supply of goods itself. Printing is ancillary. Okay, so this is supply of goods, and previous books, brochures, leaflets, all the stuff is supply of service, because there the predominant element is printing service. So this is what from case scenario number 24. And one more thing is there, so case scenario number 23, I guess. Yes, one more thing is there, that is nothing but, see, when there is branch transfer happening within the state from one branch to another branch, please understand, they cannot be called as distinct persons as per section 25 subsection 4 or subsection 5. They will not satisfy the meaning of distinct persons, because there is same registration and two branches are there within the same state. Only one registration, two branches are there. Anything moving between them is nothing but what? Branch transfer only. But branch transfer also, they should satisfy the meaning of distinct persons. If they are not satisfying the meaning of distinct persons, anything happening between them is without consideration. So no consideration, no supply. You cannot invoke schedule 1. So schedule 1 cannot be applied here because they are not distinct persons. Okay, that is what the another interesting point in this particular case scenario. So with this, we are done with case scenario number 23. Let us move on to case scenario number 24. Right, next one is case scenario number 24. See, case scenario number 24 and 25 both are mostly concentrating on time of supply, section 14 actually. So TOS section 14, change in rate of tax. Change in rate of tax. See, whenever you are calculating section 14, change in rate of tax, time of supply, and first of all, understand this is applicable for both goods as well as services, section 14. What you should see is, see, first of all, there are three things. When there is change in rate of tax, supply you have to see when the supply has happened, the goods or services, the date of payment, the date of invoice you have to check. Between these three dates, any changes has happened, the rate of tax has changed between these three dates, then section 14 will come to picture. Sir, before the change only all these three things over, or after the change after all these three things are over, then section 14 will not come into picture. Now, I'll tell you one simple technique here. See, when you're going through section 14, check where is supply. Supply of goods or services before the change, after the change. Imagine before the change, supply is there. Now, before the change, if invoice or payment, any one thing is there, any one only will be present, not both, because all the things are coming before the change. Now, it will not come for section 14. So, either invoice or payment will be there before the change along with the supply. Then what we will take? Whatever is there along with the supply. either invoice or payment, whatever is there, that will be time of supply. No sir, supply is before the change, both invoice and payment are after the change, then date of invoice or date of payment, whichever is earlier, we have to take as time of supply. Same way, opposite scenario, sir, supply has happened after the change, sir, invoice also happened after the change, then invoice will be the date of invoice will be the time of supply. No, 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 sir. Supply has happened after the change, but payment has happened after the change, sir. Payment also happened after the change. Invoice before the change only, sir. Then payment will be the date of payment will be the time of supply. That means supply is happening before or after. Along with that, whoever is there, that will be the time of supply. Both of them are not there, sir. Date of invoice or date of payment happened before change, and whichever is earlier. You know, I will show you in simple words. Here there is change in rate of tax on 10th. This information when you are gathering from the question, you should be careful. Sir, change of rate in tax happened on 10th Jan. Now I will take supply. When supply has happened? 5th January. That is before the change. Invoice 5th January. That is also before the change. Payment after the change. Correct? So supply happened before the change and invoice also before the change. So time of supply will be 5th Jan. And because two things are happening before the change, old rate will come into picture here. Okay, right here this is regarding some goods. Actually in this question they have asked this. Now the same thing, the same way, remaining points are small points in case scenario 24, nothing to worry. Case scenario 25, again if you see, change in rate of tax has happened 22nd Feb. I repeat, both this applicable for goods and services. Now there are three customers have taken the information of supply, payment and invoice, supply, payment and invoice, supply, payment and invoice. What we should see first? We should see when supply has happened. Supply has happened. See, change is 22nd Feb. Supply happened 15th Feb. That means this is before. Payment 13th Feb. This is also before. Invoice not raised till date. That means this will come after. Now you tell me which is time of supply. Along with the supply, whatever is there, that will be the time of supply. So time of supply will be 13th Feb. And because both the things are happening in the previous, before the change, old rate is applicable. Okay, same way here, sunshine also, you see, change is happening on 22nd Feb, supply is happening on 28th Feb. That means this is after change. Payment is happening before the change, invoice is happening after the change. Okay, supply is also after the change, invoice is also after the change. So what is time of supply? 28th Feb. New rate, old rate, two things are happening after the change, so it will be obviously new rate. That is how you have to calculate everywhere. So this is the simplest way of remembering section 14 for you. Okay, so these are the things. Now in case scenario number 25, there is one more interesting thing regarding advanced ruling. Not interesting thing, just a revision for you. You know, you can apply for advanced ruling for time of supply as well as value of supply, for determination of time of supply as well as value of supply. And when the authority for advanced ruling has given an order, that order, if the concerned officer or the jurisdictional officer or even the applicant for advanced ruling itself doesn't like, so they can challenge that order. They can go and file the appeal against the order given by authority for advanced ruling. With whom? With the appellate authority for advanced ruling. So any order passed by the authority for advanced ruling can be appealed by either concerned officer or jurisdictional officer or even the applicant who are aggrieved by the order, that can appeal that order in appellate authority for advanced ruling. Okay, so these are the interesting points till case scenario number 25. Hope it is clear for you all. So if you see, the next case scenario is case scenario number 26, based on educational services. Not at all any like tricky points, all the stuff, general things, educational related services exempted, the services provided to student, faculty, staff, the composite supply, the principal supplies education. So whatever the incidental things are also exempt under GST. So based on that, one small simple case study based MCQ, not that great one. If you have time, you can just go through that, otherwise not a problem. Next, case scenario number 27. This is regarding air travel agent. In this, there are certain points here. What is that? Now see, when the air travel agent is selling the tickets, he is collecting the basic fare as well as PSF and UDF, passenger service fees, and this user development fees. These airlines are collecting these charges as a pure agent, and it will be given to airport authority, and airport authority will be GST on that. So whatever the PSF and UDF collected by airline agents are not subjected to GST in the hands of airline agents, because he is purely collecting it as an agent, hence not taxable. But for collecting that, he is getting some commission. So here in the question, they have collected 1 lakh rupees including GST as PSF and UDF. See, on PSF and UDF also GST will come, but that will be paid by the airport authority. So airline operator duty is this air travel agent duty is to collect that PSF and UDF and give it to the airport authority. So for giving this, he is getting commission. So here 1 lakh he has collected like that including GST. On that he will get 5% commission including GST. Okay, so that is what the point. Now please understand. So he will get a commission of 5%. He will get a commission of 5% on the PSF UDF including GST, whatever collected, okay, as collection charges. So 1 lakh he has collected including GST on that. On that 5% he will get commission. That 5,000 will be taxable. That you should be careful. Okay, that is another point. Next, see this Zoom Air, the air travel agent. If any customer, any passenger is cancelling his ticket, they are charging 100% cancellation fees. So that means they are charging 100% cancellation charges, means already they paid 10,000 rupees for the ticket. Imagine now they are cancelling, now they will not give anything refund to the customer. So now because 100% cancellation charges are being charged, and first when you have booked the ticket, it was taxed. Now we are cancelling the ticket, we should return the tax. But for cancellation, I am charging again 100% amount. So again there is tax liability already discharged. That means net impact is zero. So now 100% cancellation charges, total amount you are forfeiting. So whatever the tax paid is proper. So for 100% cancellation charges, already you have paid tax on the same amount while booking. Now on cancellation charges, no GST implication. Okay, that is what I am trying to tell here. Okay, this one you be careful. Next. So here again, Zoom Air, this company, the air travel agent is booking tickets, giving gifts to the employees, booking tickets worth 60,000 in the year. You know, for employees, gift greater than 50,000 per employee per annum, fully taxable. That another point. Next here, there was one question. The passengers are registered under GST. Can they take ITC? Here, one point what we should remember is, if the passengers are registered, they will take ITC not only on the basic fare. They have purchased the ticket 10,000 rupees. On that, they have paid GST. Not only that, sir, PSF and UDF also they have paid no on the ticket. On that also GST is there. That amount also they can take as ITC. That you remember. Okay, you can avail ITC on the basic fare as well as the GST paid on PSF and UDF. Okay, that one. Next, and there is one more thing regarding sale of online advertisement space. For online advertisement space, that means you are seeing in websites or Instagram, Facebook, all these type of ads, etc. So this online advertisement space we are allowing, that is nothing but OIDR services, obviously. So because it is OIDR services, we should see if at all it is import of service, etc. So this is both the cases, both the supplier and recipient are within India. It is intrastate supply, hence supplier is only liable to pay GST and the recipient can happily avail ITC. Very simple one, nothing to worry. Only thing, remember, online advertisement space is nothing but OIDR services. Here one more last MCQ in this particular case scenario is, see, Zoom Air, these people are selling 1,000 tickets in bulk to Super Trip. So Super Trip bulk, in bulk 1,000 tickets it has purchased, but it was able to sell only 800 tickets and 200 tickets lapsed. Now what will happen, sir? Zoom Air has already sold 1,000 tickets, so they will pay GST on 1,000 tickets, correct? So Zoom Air is liable to pay GST on that 1,000 tickets, but Super Trip can take ITC of it. That ITC they can use for paying GST on 800 tickets. So on 800 tickets only GST implication will be there. On 200 tickets, no GST. But for paying this GST, they can take ITC of 1,000 tickets, whatever they have purchased. No, that time the ITC they can take. That alone is the point here. So with this, we are done with case scenario number 27 also. So till now, case scenario 20 till case scenario 27, we have got all the key adjustments. Hope you are clear. Now the next one is case scenario number 28 actually. So in case scenario number 28, this is actually related to telecom services mainly. With respect to that industry, they are testing your knowledge in various things. Here only thing, like first point what I wanted to explain you is regarding, see, there is a company called Infotel. It is providing telecom services to its customers. For the telecom services it is providing to its customers, what it is doing, it is collecting telecom charges as well as it is also collecting subscription charges. Why? Because using the platform of Infotel, the customers are also getting some services from Cloud Zone. Like just like using Airtel, you are subscribing to Netflix kind of thing. Okay, so these customers are paying subscription charges to Infotel, and Infotel will pay that entire amount to Cloud Zone, not even withholding 1 rupee. Okay, and the Cloud Zone will raise invoice in the name of the customers directly. That means Infotel doesn't have anything to do here between Cloud Zone and customers. Now, please understand, Infotel is providing some services to customers, and customers need something else that also Infotel is procuring and giving, but consideration Infotel is collecting and giving it to Cloud Zone. That means here, if you understand, Infotel is acting as a pure agent for these customers, the subscribers. Okay, so whatever the subscribers needs, it is getting and giving it to subscribers. Okay, it is not taking any 1 rupee extra, it is not holding any ownership on all the stuff, and of course Cloud Zone is also directly raising invoice to the subscribers. So in that case, Cloud Zone is acting, providing services to subscribers, and in middle Infotel is acting as a pure agent, is acting as a pure agent. Whatever required for subscribers, it is collecting and giving. So there is an MCQ here regarding choose the correct answer here. Correct statement, transaction between Infotel, Cloud Zone and subscribing customers. The Infotel is a pure agent, acting as a pure agent for the subscribing customers. Okay, for subscribing customers, what they need, Infotel is making sure they are getting that, and whatever it is collecting, it is paying, not even withholding 1 rupee or not even having any ownership, all the stuff. And Infotel is not supplying anything. Okay, just whatever is needed to the subscribing customer, it is just procuring and giving it to him. So acting as a pure agent for the subscribers. This is one point. Okay, hope it is clear. If you want, you can just pause the video and go through this. I just explained this particular paragraph. Okay, so this is the point. Now next one, here one more interesting thing regarding, we see regarding hotel bookings, no, like intrastate supply will happen CGST, SGST, but you are registered in other state. Same way here, this company is based in Haryana and all, of course all other different states also. Sir, this company is purchasing towers. Okay, the towers, what they are doing, they are sold by a person from Rajasthan and installed in Rajasthan. So location of supplier is also Rajasthan, place of supply is also Rajasthan, and that fellow is charging CGST plus Rajasthan GST in the invoice given to Haryana. On the Haryana registration, on the Haryana head office, what this fellow is doing, this fellow is raising an invoice with the CGST plus Rajasthan GST. Now that means, can the Haryana office take ITC of this? Obviously no, just like the hotel bookings we see, no, the same way. Okay, right, next. And in the MCQs, when they are asking, they asked you what is the GST payable in cash. Tell me that amount, GST payable in cash, assuming no ITC utilized by it. Excluding ITC, no ITC is there now. What is the GST payable in cash? Sir, you should calculate FCM liability also, RCM liability also, totally put together. What is the GST payable in cash, that you have to calculate and give the answer here, so that you be careful. Next, here while providing telecom services to the customers, the company is also thinking about providing dish antennas and cables to the customers as part and parcel of this supply, and they want to charge a fixed amount, one standard amount called 3000. But here the problem is dish antennas and cables are subjected to 28% GST, but the telecom services are subjected to 18% GST. So what is the tax treatment? See, providing this dish antennas and cables are nothing but part and parcel of the main supply of telecom service. So these are naturally bundled in the ordinary course of business. So we will call this as composite supply, and entire 3000 will be subjected to the principal supply. What is the principal supply here? The principal supply is telecom service. So 18% will be charged, not 28%. That will be the point. Right. So I think that's all we are done with the adjustments here. So with this, we are done with the case scenario number 28. Right. So now case scenario number 29. If you see in this case scenario number 29, here something related to uh, the area limited in India, and it has its subsidiary company something in abroad also. Regarding that, nothing much information in the question also, no need to worry. So here what has happened is, this company has supplied paper rolls to a school for preparing question papers. Understand, supply of services in relation to conduct of exams is exempt from GST, but supply of goods is taxable. So that one is one interesting point here. Next, bond amount recovered from the outgoing managing director. See, the managing director is breaching the contract, and for that he is making the payment. And we know breach of contract is not an act of like agreement to tolerate something, and we are getting consideration. So it cannot be treated as supply, and hence there is no GST for that. Okay, right. Next one. So they are making supply to a goods to territorial waters, in a place territorial waters which is 12 nautical miles from Kerala and 15 nautical miles from Tamil Nadu. So obviously we should take the state which is closest correct to the territorial waters, that particular location. So place of supply will become Kerala in this case because it being the closest state. Next, they have spoken something regarding advances. You know, advances for goods is not immediately taxable, but advances for services are immediately taxable. You know that. Next, there are some computers which are used for business purpose on which no ITC has been taken and they are freely disposed of. You know, permanent transfer or disposal of business assets on which ITC has been claimed, that alone is supply. If ITC is not taken, no consideration, no supply. So it is not at all a supply. Sir, they give open market value in the question, sir. That open market value in the question is just to confuse you, so you can happily ignore it. Okay, that is another adjustment. Next, some event management is done outside India, and event management is for this company is the event is conducted outside India, Dubai, but still the location of recipient itself will be taken as place of supply, that is Kerala. Okay, it is not Dubai, even though event is conducted in Dubai, because the recipient is registered in Kerala, place of supply will become Kerala. So these are the points. And one more interesting thing, in one MCQ they have asked, compute the total GST payable on outward supplies. Please be careful, this type of MCQs actually here, when they specifically mention outward supplies, you should only calculate on sales, not RCM purchases. RCM purchases should not be added. Okay, that is the another thing. So apart from that, yes, we have finished everything. Okay, so with this we are done with case scenario number 29. Let us move on to case scenario number 30. So now in this case scenario number 30, if you see, actually see their company Shreyans Limited is having multiple divisions, that is multiple businesses it is doing. But what it is doing, na, say, in one state they are taking only one registration for all the divisions. That means one interesting point what we have to understand here is any transaction between two divisions in the same state, that cannot be called as supply because they are not distinct persons, and no consideration, no supply. Hope you have understood this. So please be careful when you are going through this type of adjustments. Next, one more thing is, sir, within the same divisions again, the distinct person, something is happening without consideration, you know, supply, and payment is to be done within 180 days. Otherwise, reversal of ITC will not come into picture because it is not applicable for Schedule 1 transactions. That you don't forget. Okay, so payment of within 180 days. Otherwise, recipient should reverse ITC. All that. So you know that is not applicable for RCM supplies and Schedule 1 transactions. Hope you are able to recollect that. And one more thing, the company director has got some 5 lakh worth voucher with him and is going and staying in a hotel, and the bill is 25 lakh rupees, and he is paying 5 lakh using the voucher and balance 20 lakhs using his cash. Now, if they ask you what is the value of supply, the value of supply is 25 lakhs. Consideration is paid using voucher 5 lakhs and using cash 20 lakhs. It doesn't make that value of supply 20 lakhs. Value of supply is 25 lakhs. In the MCQ, there is a question, what is the value of supply? Value of supply means entire whatever it is paid, that is value of supply. Next, sir, we are providing an accommodation services to a foreign citizen. Of course, supplier is of India, recipient is from outside India. Because you are providing accommodation services to a US citizen, it doesn't make the place of supply falling outside India. Place of supply is dealt in section 13, subsection 4. Location of immovable property itself will be taken as place of supply. Okay, that one also please be careful. And one more small point here regarding long-term lease. The long-term lease means at least for 30 years you are taking lease, and long-term lease upfront payment of consideration is exempt under GST, including the preferential location charges also. If you remember, there was a clarification, including the location charges. They are nothing but part and parcel of this long-term lease, so it is exempt. So upfront payment of long-term lease is also exempt, and preferential location charges also exempt. These are the key points in this case scenario number 30. Okay, now let us move on to 31. In case of 31, nothing great points are involved. It is just regarding value of supply, small points only, giving discount will be excluded from the value of supply, all that. So nothing great involved. So only thing, for empty cargo containers, e-way bill generation is not required. Okay, that alone, if you remember, that is sufficient. That was the only point, which is like, you know, in certain cases, e-way bill is not required. One such case is in case of where empty cargo containers are being transported, you need not generate e-way bill. That is the only thing here in case scenario number 31. So the next case scenario number 32, if you see, what are the key points here? Nothing but, see, first of all, here they are purchasing a commodity called X. Okay, so they are purchasing that, and purchasing for 5 lakh rupees at the rate of 100 rupees per ton. Okay. Now the interesting thing is, while purchasing that, they have paid something called mandi tax on that purchase. So automatically that will also be added to the value of supply, that you should keep in mind. Now what they are doing, that this SR associates, what they are doing now, they are hedging this transaction. They are hedging the transaction of like this particular commodity what they have purchased. So he is hedging this transaction and undertook a derivative sale transaction in futures contract for the month of August at an NCDEX rate of 1100 per ton. But what happened later on the date of expiry of that future contract of the month of August, that is 31st August, commodity X, the rate of commodity was 900 per ton. So SR Associates squared off the contract without physical delivery for the month of August at the same rate. So what is happening? They are entering into a future contract. That means they are hedging this transaction where there is no delivery. If the delivery has not been taken, then we call it as derivative, and derivatives are nothing but very much within the meaning of securities. So this transaction is nothing but dealing in securities and no GST comes into picture. That you should understand. Next, there is one more thing like importing the technology, all the stuff, importation of services, RCM liability will come into picture. For that they have asked the time of supply also. Apart from that, nothing much is there here. And please understand for this, like what the brokerages what they are charging for this hedging transactions, whatever it is, they are very much taxable, brokerage, all this stuff. But that is not being tested here somewhere anywhere in the question, I guess. So nothing to worry. So I'm just telling you the information that brokerage is taxable. But regarding that, there is nowhere discussion in the MCQ questions. So nothing to worry. Right. So this is what all about case scenario number 32. In case scenario 33, if you see, there are no great points actually, but only one point is regarding appeal actually. So the point is, there is a dispute here with respect to tax payment. There is a demand of IGST 600 crores. So they wants to go for an appeal. And for that, what is the pre-deposit you should make when you are going for an appeal to appellate authority? That is the point. Please understand, very important. See, when you are going for an appeal to appellate authority, pre-deposit is 10% of tax in dispute. Guys, understand, in dispute there may be tax, interest, penalty, all these things. But only on tax portion you should pay 10% as deposit, not on interest, penalty, all that. Now you may get a doubt, sir, then in case of appeal I am going only against interest or penalty, then there is no pre-deposit only. Pre-deposit, the law clearly says only 10% of the disputed tax, not interest, late fee, penalty. Okay, so 10% of the tax or 50 crore, whichever is less. Okay, that is what the amount. So here 50 crore means 25 crores plus 25 crores. Suppose if you are going for an appeal with appellate tribunal, then it is additionally, you have already deposited 10%. Now you have like what lost the case there, you are going to tribunal. Additionally again you should deposit 20% of tax, same story, but now it becomes 100 crores. That means 50 crore plus 50 crore, whichever is less. Okay, in this case, because you are going for appellate authority, please be careful when you are reading the question. It is appellate authority or appellate tribunal. Appellate authority only 10%, appellate tribunal additionally 20% of the disputed tax. In this case you will compare 50 crores, in this case you will compare 100 crores. So here 600 crores is the tax in dispute, 10%, that is 60 crores or 50 crores, whichever is less. So we'll take 50 crores as the answer here. Okay, so what is the pre-deposit for going for an appeal before the appellate authority is 50 crores. Okay, that is what with respect to case scenario number 33. Remaining under small points, nothing much to discuss. Okay, now we are moving into 34, case study number 34. Right, the next case scenario 34, we are left with 34 and 35, that's all. So if you see in this case scenario, the key points are nothing but when you're importing, nothing but just a quick revision of this point. When you're importing OIDR services from outside India, OIDR services from outside India to a non-taxable online recipient in India only, FCM. But OIDR services from outside India to registered person in India will be RCM. So you are liable to pay GST on that. And one more interesting point is, the directors who are employees for whom we are paying salary, there is no GST on that. But whatever the sitting fees we pay to them for attending the board meetings, even though they are employees, yes, directors, sitting fees is paid not because they are employees, that is paid because they are directors of the company. So on sitting fees, RCM will come into picture. Please be careful, even though the directors are employees. Next, one more thing, the company has taken life insurance on their employees as a part of their internal policy. For internal policy, understand you will not get ITC. 17 subsection 5 blocked credit will come into picture, because internal policy is different, statutory obligation is different. So this is not statutory obligations, hence no ITC is available for you. And one more interesting thing here is, see, another important adjustment, subsidy. Whenever you see subsidy from some NGOs, not a government, so obviously we'll add it to the value of supply. But understand, subsidy only when it is given, which is linked to the price, then only you will add it to the value of supply. Here, subsidy is 5 lakh rupees in lump sum. This is not somewhere linked to the price. Please understand that. So these type of blanket subsidies which are not linked to price, they are not at all considered under GST. So no treatment under GST. You will not add it to the value of supply. Please be very careful in this particular case. Next, one more thing, sponsorship services provided. The sponsorship provided services provided to Mr. X, an individual. Sponsorship services provided to body, corporate or partnership firm only, it is coming under RCM, but for individuals it is not RCM. So you should be careful, because by looking at sponsorship services you will jump into RCM. No, it is not RCM. So these are the key adjustments or key takeaways from this particular case scenario number 34. Yes, finally we are into case scenario number 35. You can literally see, not only you are happy, I am also very happy recording this video from one day. Actually, for you, you might be getting it in 1.5 hours, something like that, but I am recording it for one full day. 24 hours time I have taken to record this. Okay, so I am finally happy. Yes, I am going to be finished with this case scenario MCQ and this video. Right, simple. In this, sir, the key points are nothing but, here they said recovery agent services provided to ABC Limited. Understand, recovery agent services provided to banks, financial institutions or NBFCs, then only RCM will come into picture. But here some ABC Limited, which is trader of goods, in that case RCM will not come into picture. That you please be careful. And one more thing, security housekeeping services to schools, that is up to higher secondary school. Inside that school only it is exempt, but here outside the school campus, so it is taxable. That you check. Next, here this renting of motor vehicle, this fellow here is a non-body corporate. He's an individual Rishi registered in Karnataka. Okay, so non-body corporate providing renting of motor vehicle to body corporate where cost of the fuel is included. RCM transaction, not that great one. But this is something very very important or interesting what I have found out, which will definitely make you to do mistake. See here, Rishi from Karnataka has got a contract with Tamil Nadu state to supply some goods, and the contract value is 5 lakhs. The moment we see this, automatically section 51 TDS comes into picture. Okay, now please understand, sir, what will happen now here. The tricky point here is the PSU has asked Rishi to supply them in the state of Karnataka. You will feel location of supply is in Karnataka, place of supply is in Karnataka, and recipient is registered in Tamil Nadu, no TDS. Like that, you will do mistake here. Please understand carefully here. Rishi is from location of supplier is Karnataka. Place of supply we should see. Place of supply, understand, this is bill to ship to model. You are billing to Tamil Nadu, which is in PSU in Tamil Nadu, and you are shipping to the state of Karnataka. Bill to ship to, billing to Tamil Nadu, shipping to Karnataka. Clear? Please understand that properly. In that case, they are asking you to deliver the goods in some different place of Karnataka. In that case, what is the place of supply? Place of supply is the location where the recipient is registered, who is giving the directions. The directions are given by a third person who is located in Tamil Nadu. Hope you are able to understand this. So this is bill to ship to model. Here you cannot straight away say location of supplier Karnataka, place of supply Karnataka, no TDS. No, no, no. Here TDS will apply. TDS will apply. TDS will come. TDS at what rate? 2% on the payment. On the payment, that is 1,50,000. Okay, that is the answer. So please be very careful here. There is one MCQ here regarding TDS. Okay, so TDS will be IGST straight away. You can, without even going through the question, you can just say, I mean, without calculation also you can say 1,50,000. Only IGST, it is interstate supply, so only IGST should be the answer. Okay, option B. So hope it is clear for you. Okay, option B. Okay, so that way I repeat guys, very very important, please understand, because the moment you see this question you get a feeling that there is no TDS implication here. So don't feel that way, there is TDS implication, so please be careful. Okay, so friends, hope you have enjoyed this lecture. Seriously, I have put so much of efforts in recording this and hope this is really helpful for you. Only request is share this with your friends who are writing the upcoming attempts, maybe May 25, keeping in mind this May 25 students, because they got too many holidays. I thought this will help them for revising the important points, all the stuff. So anybody, May 25, September 25 upcoming attempts, any of your friends or seniors or colleagues, writing the upcoming CA final exams, please do share this video with them. And if you are going to write this, yes, I wish you all the very best. Please enjoy your preparation. Please be mentally cool and calm during your exams. Definitely you will achieve success. Wishing you all the very best from my end. This is your Mr. GST signing off. Jai Hind.